believe that there's three key risks that are China change of business model and as a result lower growth, the lower commodity price for longer, and the tightening of financials as a result of new monetary policies that has just begun and more probably will come out too as the three key factors. That's on the economic front. But then on the top of it, we see also some very concerning geopolitical threats that have an economic impact on many countries around the world.
And then we have, of course, folding both is Brexit. Is that in your top three risks for this year?
Well, it's clearly part of the uncertainty that we have at the moment, particularly in the European Union and concerning the financial sector as well, because of the size of the financial sector that London represents.
You talked about China, and we're concerned about the debt load there. We're concerned that actually, despite all of the central bank action, we're still in this no growth or very low growth economic rut. Are we sowing the seeds for another recession, or are we looking at a shock?
I wouldn't say that China has no growth. You know, we forecast China at 6.5%.
Yeah.
It's really something to write home about. If we had more of those countries with that. See the Chinese authorities as being determined of the system. And you know, when all leaders come out to reinforce the fact that they will restructure the state-owned enterprises, which are clearly one drag on growth, particularly in that change of business models. You don't need as much iron, you don't need as much construction, you don't need as much of the heavy-duty manufacturing work that had been done for decades in China. So that is a restructuring which will imply a lot of hard work, a lot of manpower being retrained, hopefully, and it implies a lot of balance sheet revision that will have an impact in the longer term. But in a way, the fact that China can produce those spillovers around the world, it's a bit of a badge of honor of being part and a critical part of the globalization of the economy.
You don't worry about recession, though? Even if all the concerning news were to come true, either on the geopolitics front or the political front?
You know, what we fear is this sort of very new mediocre that I have warned about last year, which would mean weak growth, no new jobs, no high inflation, still high debt, all those things that should be low and that are high, continuing that trend. So we call for policy actions, and we call for what I have named the three-pronged approach, which combines structural measures, fiscal policies, and monetary policy. So the three together, not just one after the other. We're seeing a lot of monetary policies at the moment, but we need the three, and we need it fast.
Over the weekend, we also had that leak on Greece and some of the conversation that the officials were having in Greece. Does that change your relationship dramatically with the Greeks and the EU countries in general?
You know, we continue to be focused on addressing the Greek situation by negotiating in good faith with a twofold objective. One is to restore the financial stability of the country and to give it debt sustainability. And number two, to equip that economy with the competitiveness, the productivity, the structural reforms that are needed for it to be independent. The objectives have not changed. The negotiations will continue. I have a team on the ground at the moment, and we will continue to do so in good faith.
Bloomberg's Francis Lacroix there with the IMF Managing Director Christine Lagarde in Frankfurt earlier. Today, right, coming up, will the IMF's gloomy outlook shake up the biggest bull on Wall Street? Tom Lear-Fundstrat joins us next, Benny.
And don't miss our exclusive interview with U.S. Secretary of State John Kerry. He'll be on Bloomberg at 11 a.m. Eastern Time, 4 p.m. in London. He'll join us from the Bloomberg New Energy Finance Summit on the economic case for clean energy, national security, and much more.
Bloomberg Television is brought to you by T. Rowe Price, helping you stay confident in today's uncertain markets. Invest with confidence.
demonstration
The
of
pursuit of
Wirecast.
healthier. It begins from the second we're born. Because healthier doesn't happen all by itself. It needs to be earned every day. Using wellness to keep away illness. And believing a single life can be made better by millions of others. As a health services and innovation company, Optum powers modern healthcare by connecting every part of it. So while the world keeps searching for healthier, we're here to make healthier happen. Optum. Healthier is here.
This is a
The
demonstration
first
of
stock index was
Wirecast.
created over 100 years ago as a benchmark for average. Yet many people still build portfolios with strategies that just track the benchmarks. But investing isn't about achieving average. It's about achieving goals. And Invesco believes doing that today requires the art and expertise of high conviction investing. Translation? It's time to bench the benchmarks.
The journey was long and arduous, yet with his Kia Sportage, this urban pioneer
Demonstration of
remained determined.
Wirecast.
Navigate to Sunbeam Vintage.
Navigating to Sunbeam Vintage.
Now, here he is, unearthing one of history's greatest treasures. Mission accomplished. With his collection nearly complete, his journey continues. The all-new Kia Sportage, now with available Android Auto, crafted for the urban pioneer.
Live from London and New York, I'm Mark Barton.
And I'm Betty
Demonstration
Lou.
of
You're watching
Wirecast.
Bloomberg Markets. Time now for the Bloomberg Business Flash. We'll look at some of the biggest business stories in the news right now. Credit Suisse has lost nearly $1 billion since October on soured credit positions, but its CEO says the bank is in control of the risks that it takes. Tidjane Thiam tells Bloomberg TV that Credit Suisse's operational risk is, quote, very well managed. He's trying to restore investor confidence as he accelerates restructuring and faces confusion over losses on risky fixed income trades. Some good news for Valiant Pharmaceuticals. A special board committee has found no additional accounting issues that would require more restatements. Valiant also says it plans to file its annual report on or before April 29th. Valiant shares plummeted amid questions over its drug prices and its ties to a mail-order pharmacy. And the company that limits your thoughts to 140 characters will now bring you pro football. Twitter has won the rights to show Thursday night NFL games online. The league is using those games to reach fans who've dropped their cable television subscriptions.
This is a demonstration of Wirecast.
That is your Bloomberg Business Flash. It's risk off, as you can see, for global stocks. Equity markets across the world are selling off today. And the rally that lifted the S&P as much as 13% from its low in February is starting to lose momentum. But amid all this doom and gloom, there is some optimism. The biggest bull on the street, Tom Lee of Fundstrat, is here to make his case for new highs for the S&P. Tom has called for gains in stocks for 6 straight years, and his calls have rarely missed. His S&P target of 23.25 for the end of the year is the highest among strategists surveyed by Bloomberg. Okay, so Tom, you feel good about a rally this year, but are clients feeling good about the markets?
They're not, Betty. I mean, clients are still pretty pessimistic. They think you've got a lot of recession risk, and you can see it in the short interest. Clients are net short. I mean, short interest is the highest since September 08.
Right.
More short stocks are short today than they were in March 09.
So they're nervous, but you're confident that markets are going to go up. Why?
Well, I think there's some really clear signals coming through that give us optimism.
Of Wirecast.
One is the dollar is been flat as a pancake for the last 15 months. It was the strength of the dollar last year that choked off exports, hurt EM credit, hurt S&P earnings. It's turning into a big tailwind. Dollar is now down year over year. It's going to be a 1 or 2% tailwind into the end of the year. Every 1% of dollar weakness is $30 billion in sales upside. So I think the big story
so
here
will
is...
start to be reflected in the earnings then?
Yes, I think earnings estimates are going up.
Be interesting to see, Tom, what the weak dollar, if you're right, means for the oil price. And I keep on looking, Tom, at the correlation between the oil price and major indices such as the S&P 500 and Stock 600. Tom, what's going to break that correlation? Because as we know, since August, we've gone from a negative correlation, and they're moving pretty closely in lockstep right now.
Yeah, I think that correlation makes a lot of sense as long as oil is below $50. The reason being, low oil puts enormous pressure on the high yield markets. Therefore, the correlation between oil and equity should be pretty high. We think dollar weakness is going to help oil, and I think oil futures markets are telling us oil's bottomed, right? Because the level of contango is collapsing. So I think oil bottomed in February, which means it's another reason to be bullish.
Tom, earlier we spoke to Adam Parker, who's Morgan Stanley's chief US equity strategist. Just listen to what he had to say about European stocks.
Europe's for vacation, it's not for stocks, right? I mean, you don't have earnings growth in areas of healthcare, of tech. You don't really have a basket of consumer companies that's got the exposure to the U.S. consumer, which you can say what you want, but the U.S. consumer dollars are still the biggest game in town globally. And again, I think our financials are in way better shape.
Tom, I've got to take offense at that. Europe is for vacation. That's the one angle which I can agree with. It's not for stocks. Is that a bit harsh?
Yeah, I think it is. First of all, you take a 60-year series of the DAX and S&P. The compounding return is the same. You know, I mean, the S&P and the DAX track each other. You know, the correlation's 1 over the last 60 years. I think there's a big catch-up trade coming in Europe because European momentum, while it's not great, it's
This is a demonstration of Wirecast. This is a demonstration of Wirecast.
Let's take a step back. I think retail investors are about to put a lot of money into the equity markets because they're trend followers, and the S&P's had 2 positive quarters in a row. Hedge funds can't keep a $1 trillion short position larger than March 09. So I think there's enormous demand coming. The buybacks is not the only game in town. At the moment, it's the only game in town, but that's a
Wirecast.
That belies the last 120 years. The last 120 years, the demand in the market is the saver, and the saver